cool. I'll start recording for the boys. Send it on Discord if you can, please.
Okay, cool.
So how's it going getting to know TradingView and Discord and everything now? I know it's new animals for you. But are you working it out?
Are you speaking to me, Jared?
Yeah.
Yeah. I think I learn more after the class, because the last two sessions has just been like I just don't know what's going on, but then afterwards you do the research and you go back to the lesson, and then you watch it and then you kind of get a better idea. So definitely learning. Just at the time I've got no questions to ask when we're doing the sessions, because I don't know what I'm doing.
Yeah, but that's why I say bring your questions to the next class so I can answer them. Sure. But also I'm like you, I learn by doing, so watching stuff for me, I get the concept, but then I need to go and do it myself.
Yeah, that's it.
Yeah, I'm with Kevin there, right? Fun DJ for shit. His name is Kevin, right?
Yeah.
Anyways, all the gentlemen.
How's it, Sipa?
I agree with you, gents. During the lesson, I am listening, but I'm listening to what I should go research, and then I have questions after, after I've done my research and I've tried it on my own, and I go through the lessons again, and I pick up on where I struggle.
100%, gents, but that's why I'm here as a mentor, so I'm not just going to give you the lesson and then leave you dry. So the next lesson, this is why I always open it up to Q&As, and that's why I do the homework as well. So then I can help you out if you're not learning what I've taught in that lesson. That's why I wanted you guys to draw out your order blocks and stuff like that. So it shows me that you've done, your homework and your research, which is needed.
I know, Jared, I'm sorry, I am falling behind because I had to prioritize school for a bit. I was getting really heavy on me, but I promise next week, Monday, I'll have all the homework that's been due. I'm finished with school anyways. I was writing my last few tests.
100%, bro. No worries. Look, I'll also say that this mentorship is for life. It's a once-off payment. You can stay doing tier 1 lessons for as long as you need. You'll never be kicked out of a group. You'll see that we've got 15 guys in this group from February when we started. And they're still going to pop in, etc. They've got access to all the recordings. So everyone can take their own time. People have priorities in their life, yes. As Charles said last night in tier 2, he's got an 18-month plan for trading to take over his work income. And for him, he's learning the concepts now, but he's not trading actively. But when I started trading, I went full-time because I sold my business during COVID, and I went full-time into trading. So I was living 24-hour days researching, backtesting, actual trading. So everyone's got their own speed. So don't worry about the homework if you can't complete it. But just know that you will be at a disadvantage for the next lesson if you don't understand the concepts. But at the same time, you can always go back to it.
That's another thing that I actually wanted to say. I think I kind of understand the concepts, but then now also, since I'm using trading, TradingView has actually been showing me playing trying to navigate things and stuff like that.
TradingView is like a little video game. Once you learn how to play it, then you know how to play it,
So I'm finished with school, so I hope I am. So now I'm more focused on trading and stuff.
Okay, cool. Well, I've got Kevin's homework open, so you can learn from this SEPA going forward. I'm going to share my screen now.
Jared, Glenn says he's having problems with his laptop, but he's logging in through his phone. So
Yeah.
yeah.
Yeah, you can watch through your phone with Discord.
Got you. Okay, cool.
Just tell them to join the chat room on the Discord channel
Yeah.
where our names are. But you can 100% watch on your phone.
Cool. All right. Well, I'll let him sort it out, but let's get going.
I think I'll just wait for him so that he doesn't have to.
Let me find out how long he's going to be. I'll call you back.
Lekker.
No, I'll call him quick.
So just while he's calling him, tonight I've got a recorded lesson as well. So just for you guys to know, when I do talk about the homework, I'll give you guys a new homework. This was probably 2-3 weeks ago I did this lesson. It just helps me having these recorded because when I did teach these lessons, I had all my notes in front of me and I know that everything is covered in these lessons. And I like that I got tier 1 out of the way in exactly 1 month, which was 8 lessons. So I'm going to keep streaming my previous recordings. In the beginning, 15 minutes to half an hour, we'll do Q&As going over the homework, and then obviously at the end of the video we'll do another 10-15 minutes of Q&A, just so that you guys got it all. But all the content is in there. You've seen the reviews. Everyone in tier 1 has absolutely enjoyed the teaching, so I'm just going to keep it simple and not miss anything out and give you guys the same experience that the first group of people got with the teachings. So in this lesson, we're going to combine market structure, order blocks. I think I go into fair value gaps as well. So, and then my trading mentality of my steps, what I look for in the market. So step 1, step 2, step 3, step 4. And I break that all down and I see Reynolds in. So he should be good to go now. So if you can all look at my screen, this is Kevin's homework. I know Kevin did ask me a few questions before the stream, and I can see he is struggling a little bit on order blocks here. If I'm honest, Kev, I think you need to go back to the first lesson. So if you all can see my mouse here, this order block here. So where I draw my order blocks is from the exact candle to the right, okay? This looks more like support and resistance. So for me, remember we talked about last lesson, which is the opposite color candle to what causes the change of structure. So if we look at the top section here, there's a clear change of structure here. So we've been making higher highs, higher lows, higher highs, higher lows. Then a higher low comes into play here, equal lows. Then we get a lower high. So after a lower high comes a lower low. So what was the opposite candle? So if we're going up, we're looking at white candles. If we're going down, we're looking at blue candles here on Kevin's chart. Mine is actually the opposite. I have blue candles going up, white candles down. But I can see this white candle sticking out for me here. This was the last white candle before the blue move, which is the down move. So this would be your order block here, Kev, and you draw that out to the right, okay? This change structure on the internal structure here. But then we have this low here. Why am I focusing on this low? So this low was the last low that created the higher high. So this low here created the highest high here. So for me, this is a major change of structure, okay? So then if we look, where is the last white candle before this blue move that changed the structure? It's in here. This order block here, if you draw it out, that's why this level got tapped perfectly on the bottom of that white candle there, if you draw it out. So that is your order block here. I will go into the chart because obviously we've got the US 100 chart, but I'm just going to go over his. I'm not sure why you said there was an order block here. Maybe you should have looked at that order block there, because that's at the top of the peak after it has mitigated this order block. And then also we look at another break of structure here, which is the last white candle before this move that broke this. It's here. So this is your order block here. So I know we're on a daily time frame here, but if you switch to a 2-day, these two candles here, these two white candles would have made a perfect order block here for us. And you see that low was touched to perfection there. Okay, so then same thing here. This order block here that you've drawn, I think you're checking out this zone. This is perfect. This is where I took my short a couple of days ago. So we look at this high, this low. We got this high, comes into this order block here. We have a break of structure here. Now again, this is probably a 2-day candle. I'll go back into this and show you guys. But this was the last white up movement. If you're on the 2-day thing, this would be blue, this would be blue, this would be blue. This broke the structure. Here's your order block here. We tapped into it, mitigated it, and came lower. So that's just me looking at Kev's homework. I hope that makes more sense to him. I will share my screen now. And I'll go on to US 100 and I will personally draw out the order blocks for you for your homework.
Hey, Jared.
Yeah, bro.
I think what happened there is I changed my my days from weeks to months, and I might have drawn it up with the other ones. I'm actually looking back at the diagram that I sent you, the graph that I sent you. What I did was I did a screenshot. Yeah, I made a mess up there. I should have. I did my lines and then I changed my time frame.
Yes.
Yeah,
Okay.
and yeah, I actually sent you the wrong graph. I'm so sorry, but it was kind of right. But yeah,
Yeah.
I sent you the wrong one. Sorry.
No problem. Here, I'll start us out. So we're going from there to there, and let me just take you through how I see these order blocks quickly. Well, not quickly, but I do it quite quickly. So we're on the daily time frame here. I noticed this change of structure here. So for me, I automatically bring my eyes to there. Templates. So I have supply and demand templates that I use. You guys will learn this, but I just make, for short positions, I have a red box that I use, and long positions, I use a green box. But obviously, market has shifted to the downside, so we're only looking for shorts. Okay. So I noticed that zone was created from that zone. But as I said, here's our low that really makes sense. So if I go in here to that candle there, you can see how we literally like tap it to the T. We can maybe even look at the, sorry, I don't have the 2-day open because I don't really use it that much. But we've got that. At the same time, what caused this break of structure here was also this area right here, probably on a lower time frame. So if we go on the 4-hour, we'll see that zone perfectly tapped right there. That's our order block there. Go back to our daily. We saw this happen here, break of structure, this zone is our break of structure zone. Again, taps it to the T. Then we look at this zone here, what broke this zone here, taps it to the T. Now we're in a funny part of the market where we have changed character to the upside and mitigated an order block here. So for me, what caused this up movement here, I would honestly say is this zone here, because remember we got to use our fib and make sure that it's below the 50% in the golden zone. So my next buying opportunity for this would be here. So that's just how I see order blocks, okay? At the same time, Raynor has sent me some PDF stuff for you guys to look at. So I'm going to look at it tomorrow and then go over with a fine-tuned code just to help you guys, you know, have some written language to go over as well as the videos. But I'm telling you now, if you guys spend, say, 10 hours this week just looking for, even not this week, this month, looking for order blocks, you'll find them everywhere you look, okay? You can go back as far as on TradingView right now, 2015. And trust me, if you go into these zones, you're going to find order blocks and how the market, as soon as technology switched to digital trading, all these big money players were looking for ways to make money and take out liquidity in the market. Because remember, we say the market trades from liquidity to liquidity because they got so much money to put in the market that there's not enough positions that they can fill. So this is how they're using the market. The algorithm knows, okay, this zone here was built to acquire positions to go short. So when money comes back up into this zone, they start flipping the price action to short. Now, this doesn't mean that they're selling. They offering, so how the algorithm works is they start offering price, say price is here. They start offering price lower and lower and lower and lower and lower at like 1 million times a second almost. And we come in as retail traders and we say sell the market at market price. So market price, they posting thousands of orders lower. So when everyone's getting in, they buying the algorithm's offers lower and lower and lower and lower. And when you see it, when you get into a right zone like here, the way that it spools, you see how quickly that down movement is here. Oh, sorry. You see how quick that down movement is here. Like it's leaving gaps all along the way. Like it's literally spooling price down here. The day ends. Market opens, price opens here. It starts spooling down. So that's how we know where smart money is getting into the market. And this is what they use, this order block. So you see how this order block moves up and down and how orders are like offered. This is how they manipulate the market. So as soon as like they want to push price down, they start offering prices down here and people are snapping in and selling at that price. So this is how they manipulate the market, is with the order book here. And they use the algorithms to watch that because no human being has the skill or the speed to execute at these zones. But anyway, that's just going over the order blocks. Again, watch the video from last lesson if you still don't understand. I'll put up a PDF tomorrow. And before I go on, is there any questions to today's lesson? Sorry, I don't have the chat up if someone's chatting. Let me just check. Are we all good? Can I just get a thumbs up or something if we good to move on to today's lesson?
Let's rock and roll.
Cool.
Move on.
Okay. So I did suggest if you guys could wear headphones. I do know that this lesson from now, I did adjust my mic and get the settings better, but at the same time, if you want to engage with the content and listen to it properly, I do suggest headphones. So I'm going to mute now. I'm going to eat dinner and then I'll be back after this video. It's a 25-minute video. I go over the concepts and how I look at the market and my confluences that I need before I enter. And we are dealing with US 500. So this is US 100 on my screen right now. US 500, you'll see, is a similar mirror to this. So this is S&P 500. US 100 is NASDAQ. So NASDAQ's the top 100 tech companies in the US, your Twitters, your Facebooks, your Tesla. Then the US 500 has the top 500 companies in America. I trade this indice a lot. I find it gives me smoother results than NASDAQ. NASDAQ's a little bit more volatile on the edges, whereas US 500 it's got a larger database of stocks. So for me, it gives me more confidence in where the big money is entering and exiting. So yeah, I'm going to mute now and I'll see you guys after the video and we can chat some more then. Cool. Right, welcome to lesson 4, guys. This is a recap of our lesson on Wednesday. The reason I couldn't post the video is I'm still getting used to using OBS to record. I have pressed the number on my numlock and that changes my scene to the face cam. I had my face cam off, so half the video was black. And I'm not gonna let the other guys have missed out, or if you wanted to check back over the lesson again. I have to listen to my voice without seeing what I'm showing. So let's recap this. I made the analogy of taking my dogs for a walk. So basically, a dog will sniff around and the dog will only pee when it smells pee. So for us as traders, we should only enter a trade when we can smell the pee. And smelling the pee for us traders is seeing when institutionals, large institutions, banks, etc., smart money get into the market. What I mean by this is a dog finds its confirmation in smelling pee. It see anything. So if we don't find out, we can see but I cannot hear. Okay, hold on, guys. Okay, sorry guys, I had a technical difficulty there. Just give me 2 seconds. 2 seconds, please. Sorry. This is a really good lesson. I was just listening to the beginning of it. Alright. Yeah. Share screen. Application. I'm going live now. So can you guys connect to my live screen there? It just went live. I'm going to play and then let me know if you can hear it, please. Alright, welcome to lesson 4, guys. This is a recap of our lesson on Wednesday.
The sound here.
The reason I couldn't post
Okay,
the video
awesome.
is
Thanks, guys.
getting used to using OBS to record. I had pressed a number on my numlock pad that changes my scene to the face cam, and I had my face cam off, so half the video was black. And I'm not gonna let the other guys that missed out, or if you wanted to check back and go over the lesson again, have to listen to my voice without seeing what I'm showing. So let's recap this. I made the analogy of taking my dogs for a walk. So basically, a dog will sniff around, and a dog will only pee when it smells pee. So for us as traders, we should only enter a trade when we can smell the pee. And smelling the pee for us traders is seeing when institutionals, large institutions, banks, etc., smart money get into the market. What I mean by this is a dog finds its confirmation in smelling pee. So if we don't find our confirmation, we're shooting ourselves in the foot over and over again, looking at certain order blocks, etc., trying to get in the market, thinking that we know that's exactly where the institutions get in. So we need to find out where the institutional money came from in order to break the structure, change the character, etc. And that is our valid zone for order blocks. And how we do this is in a 3-step process, okay? So I've written out the 3-step process. I did give it to the guys in the group on Wednesday. Number 1 is identifying structure. We learned that in the first lesson. We need to create a narrative of the market. We need to find our range, which we learned in lesson 2. Determining where your strong low high is, where your weak low high is, aka where has liquidity been grabbed and where is the next run on liquidity most likely going to be. So if we look at S&P here, this is where the market has been trending. That is our market right now. Let me just make it a different color, easier to see. Something like that. So we can see what creates, let me show you what creates a strong high or a strong low. Okay? The market did come from this shape. Like so. And we'll put that in green to signify that we were bullish, okay? So we were bullish this whole market until we had the break of this low here. This break here, this change in character. Okay? So this signals a change in character. Why? Because we broke this low. So what signals a strong low or strong high is it's in its name, it not being broken. So if we look here, every one of these lows being created on the upside doesn't get broken. This low doesn't get broken, this low doesn't get broken, this low doesn't get broken, this low doesn't get broken. So these are strong lows, strong, 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 strong. So we know trading up this, we're looking for longs only while this market's in this trend, okay? So we are looking for strong lows to being formed and getting in on these strong lows. Now you see when there's a massive trending market, our order blocks aren't usually low, okay? So we see this high getting broken here. Market comes up, comes into find liquidity in the fair value gap using this order block here as confirmation. Then we get a strong low form. We get another low come, but you see how it doesn't take out that low. So we know this is a strong low, and we can get in on the second low or this low here. So what dictates a strong low is weak highs being formed. You see how this high here got broken, this high here got broken, this high here got broken. So that's how we find our weak highs. So that's how we know our structure is bullish. Now, if you flip it over to the bearish side of things, when we have a change of character, we We have a break of a strong low here, which then creates the opposite, weak lows now. And now we form a high that doesn't break this high. This is a strong high. Now this becomes a strong high. You see that? So this high will not be broken. This is a weak low, it gets broken. We form another weak low. So we know this high will not be broken. What do we get? Another strong high. Then we know we've got a weak low because the high didn't break this. So now we have another weak low. And it seems like we've put in another strong high. So you see how this entry here was a great entry off this order block here. To go lower, to break this weak low. So this is the next run on liquidity. Yeah. This was a run on liquidity. This was a run on liquidity. So we go from runs of liquidity. Where will the next run of... So first of all, this was a grab of liquidity to create this low. Where will the next liquidity go once a strong low is being... a strong high is being placed? This liquidity zone. But the strong high is grabbing liquidity in the forms of fair value gaps, bouncing off of order blocks. So I hope that explains it in the short and sweet version. So yeah, watch for NASDAQ to break this low here. Or S&P to come back up into somewhere around here for the next trade to break this low. This is your swing trade. This is on the daily time frame. So these are your trades that you can look out for as guys working 9 to 5s. Look at the charts this way. You find your strong high being supported, your change of character, and then your confirmation entry into your strong high. Go lower. Now, I did say on the call on Wednesday that I like to look for the double confirmation. So if we've got market coming like this, market changes structure at a point. Let's say we here in the market here. This is in the lower time frames now. So in the lower time frames, I like to look for double confirmation. So you usually have the change of character here, and you look for order block here to get long. Now what have you created? This was a weak low, turned into a strong low because of the change of character, and now this becomes a weak high, creating another strong low. I like to get on the second confirmation because we then confirm that this is a weak high. Then we know we've got two strong lows, a weak high, and then whatever high is now formed, you have another weak high. So you have two strong lows, two weak highs for you to come back into another order block, fair value gap, or breaker block to then know you're going to break that high and you're in on the move. Because sometimes the market will come down, change character, and then just carry on going down. So this is how you know, okay, I don't have to take this loss here with my stop loss there. If it carries on going down, it's not the right zone in the higher time frames to get into. So this is how you confirm on a lower time frame on where to get in on the higher time frames. I hope that makes sense. Now I figured out where to delete all my brush tools. Now I'm able to do this. Okay, so one is structure. That is how we find structure. Okay, so I basically went through the whole 3-step criteria without going through it. So one is structure, create your narrative. We created our narrative here with the long arms. Supply and demand zones. You look for your order blocks, your fair value gaps, where institutions take large position that needs some sort of mitigation. Okay. So you see this order block here that created the down, was the breaker block, the down move, and it's come up into probably a smaller fair value gap / order block in here, mitigated it, probably didn't reach it here, mitigated it, and then headed down. So make sure that it mitigates. That zone mitigation means fills it up, not fills it up, taps into it. And then 3 is your confirmation on your lower time frame. Your change of character, I would say your change of character, double confirmation. Which has double 2 times weak and strong highs or lows on the lower time frame. Now your rule to find the lower time frame I've been testing and it's working well for me is whatever time frame you're doing the analysis on. So I'm on the daily, where you're looking for the significant change of characters with the double confirmation. Your rule by 30 is, I bring up my calculator. You're on the daily, so you need to find the hours, because everything under the daily is in hours and minutes. So if you're in the hours, you times by 60 to get the minutes. So the daily is 24 hours times by 60 minutes divided by 30 equals 48. So I'd round that up to the 1 hour. Always round up, not down. Now if you're on the 1 hour, times by 60 minutes divided by 30 is on the 2 minute. And if you're on the 4 hour, times by 60 divided by 30, 8 minutes. So I'd go 10 minutes. And that's what you're looking for, the double confirmations, okay? Sorry guys, just a pause there. I didn't really go into the depth there. So that's my rule of 30. So when I'm going into an order block where I'm looking for a change of character, say we in this bearish movement here in the red, and we're looking for shorts, and we come back into this area and we've identified an order block, I'd then go into the rule of 30. So the daily, I'd be looking at the 1 hour. On the 1 hour time frame, after I've tapped into that order block, I'm then looking for that double entry confirmation pattern that I showed you with the weak, the double weak lows and the strong highs, and that's where I would enter. And I'm sure I'll go into a bit more depth on that here, just to jump in there. Yeah, so that's just a recap of our lesson. I obviously went over it quite briefly, but now that you have the actual video, you can rewind it and go over it. I didn't want to waffle on about stories about my dog peeing and pooing and that sort of stuff. And you have everything talked about in this lesson, in the previous lessons. If you don't understand range, go to episode 2 or 3, I think, to create the narrative. Now we know weak highs, we lows, and we learned that the market moves from liquidity to liquidity. We learned order blocks and breaker blocks. And now we know the confirmation entry, double confirmation on lower time frames, divide by 30 on your higher time frame bias. Another thing I wanted to tell you guys about is I have started a mini challenge for myself. At the beginning of this mentorship, I did take 500 Rand to 1,000 Rand, and then I took that 1,000 Rand to 2,000 Rand. I then withdrew it from my IFX account because I see that the spread for small accounts is quite drastic. So I did go to athensmarkets.io. This is where I trade with my crypto and stuff. And I did deposit that 2 grand into, I'll show you guys, $102, because after fees I withdrew it into my account, and then I bought USDT on Binance, and then I put it into a pro raw spread and low commissions account. So what raw spreads means is if I sell from 4325.7, my entry is at 4325.7, whereas IFX, if I sold, would get me at 4320 or something. So I was automatically in drawdown. So I have been using Athens for about a year. I have had no trouble. Obviously, you just need to deposit with crypto. So you see to your wallet, my crypto address, and then you can use USDT or Bitcoin. I use USDT because Bitcoin fluctuates as you've got it in your wallet, and sometimes you lose money. Minimum deposit is $25 though. That's the only thing. So I'm going to play with this new Athens account I just opened just for this challenge. I've got my other account with all my other money in. Just on this challenge, my challenge was to take $50, which is 1,000 Rand, to $500, I think it was, 10K. And I did it in about 2.5-3 weeks. And the whole point of this mentorship is I want to get you guys funded. So in tier 2, we're going to learn about funded accounts, with prop firms. Basically, with $500, I was able to buy a challenge, which I have to hit 8% on $100,000 in 1 month, minimum of 5 days trading. And then once I passed that, after 5-6 days, I passed it. Then I get the second part of the challenge, which is to do that again, but for 5%. And I've got 60 days to do that, minimum of 5 days. I passed that. So then you get funded with real dollars, $100,000 account. There's a lot of rules in place to trade these accounts. So you can't lose more than 5% per day, etc. We'll go into all the rules, but you guys shouldn't be taking those challenges just yet. You still need to learn how smart money concepts works, and then test yourselves on demo accounts, etc. But basically, I did this challenge for tier 1 to show people how it's possible. And I am giving away that funded account. I've passed the 2 challenges. I'm giving that away for free to one of the students end of this month. I am going to take the account up maybe 5-6% for them as well, just so that they can withdraw. And how it works is your first withdrawal, you keep 75% of the profits. The second month you can do, I think it's 85% of the profits. And then also when you pass the challenge, you get your $500 back. And I think the minimum account you can do is a $5,000 account. And it costs you $50, which is 1,000 Rand to get access to $5,000. So I've been trading funded accounts for better half than a year, and I must say it's the easiest access to large capital, and it does really help you become a better trader at the same time, because you're within rules and you can't just enter in silly trades and I must buy now because it's NFP and the market's shooting up. You will blow that account, and then you have to start from, challenge 1 again. But anyway, let's see what's left in the rest of this video. Obviously, this is a long time ago, but I might just skip through this challenge section. I'll show you guys on the platform. 248167 is the account that I've started this challenge on. My goal is to get now this $100 up to a... We'll just watch the rest of it. Funding. I saw this new funding company, Rocket 21. So this is the goal, to get you guys to get funded. Get funded for a prop firm. The reason I like this one is the rules are a lot less lax. So my goal is to get $100,000 account with a $579 fee. There's no refund unless you pass stage 2, then you get that money back. And then I will then do a giveaway for that money to you guys as the students. I will buy you a challenge. So basically your max daily loss is 5% of the 100,000. You're trading with a demo in step 1 and step 2. You got 30 days, 8 minimum trading days, maximum daily loss 5%, and then maximum. So we are doing the challenge on a different company, but this just outlines it. I'm not sure you guys have seen this before, so I'll just roll this footage so you can see what these challenges are about. But we use MyForex funds, and they have minimum 5 days trading. Maximum daily losses are the same, and target is 8%, and the refundable fee is $500. So we found the best challenge company to go with. I have accounts with different funding accounts. FTMO is one of the first challenge accounts that I ever traded. I've got 2 with them now, and I've got one with MyForex funds, and then the one that I'm giving away as well. I'll also do a giveaway for you guys. So I'm not going to do the $50 to $500 challenge with you guys because it just takes up too much time, and I'm trading larger capital than that. But at the end of stage tier 2, we'll do a quiz, which I told the guys last night in tier 2. We'll do a quiz on the whole course, and obviously the winner of that course, I'm going to give away a fully funded account where I've passed the verification for them, for you guys. And then, yeah, you guys get access to, I'm probably going to do $100,000 again account for you guys. So, yeah, basically, if you make it to tier 2 and you shine and you win that thing, I know you guys all paid for your tuition, but you could even, you know, let's just say you earn 10% on a $10,000 account in 1 month. That's $10,000. You keep 80% of that. It's upwards of 100 grand you could earn in your first month trading as a funded trader. And in tier 2, we go through, I live stream like most of my trades that I do to you guys, as well as you know, teaching you how my strategy, how much I risk per trade, and all that type of stuff. But anyway, enjoy the rest of the video, and I'll chat to you at the end. Loss overall on the account is 10%, and your goal is to get 8%. Whereas on FTMO, I think it's 10%. And then your second challenge is you got 60 days to do the same thing, but only 5% you need. You got the same drawdowns. And then you become a trader. They give you real money. And whatever you make in that month, they give you 90% of that. So on FTMO, it's 80%. I'm currently with FTMO and MyForex funds. And what I like about this is the payout structure is a bit better. So you don't have to give as much money back. And I do know some trusted traders that are using this now. So I'm going to start moving my accounts over. Just keep my FTMO open, because on my MT5, I do have a trade copier. So whenever I enter a trade, it automatically scales to the account 1% of the account. Because on these high accounts, you only risk 1%, because you know your daily loss is 5%. So you're only risking 1% to make 6%, and your goal is to make 10%. So even at the beginning, I actually recommend doing 0.5% of the account, because you have to do 8 trading days. So you might as well not risk as much. As long as in 30 days you make 10% on the account, so make $110,000. Hope this gives you guys a little overview of that, but here's just a little structure of how I've been flipping those accounts. Let me just change this to, yeah, we'll say with 100 Rand. So if I have 100 Rand in my account, I'm risking 10%. I'm only putting money in that I know really doesn't matter to me. As I said, I started with 500, but I could have taken 100 to 500. It just would have taken me longer. And I'm going to do a YouTube video marking down, showing all the trades that I did. I want to say the YouTube video is going to be like $5 to being funded $100,000 in a month. or something like that. So I'd risk 10% of my 500 Rand. If I win a 1 to 10 risk to reward ratio, like you guys have seen I have done, then I win 100 Rand basically, because 10 times 10 is 100%. So I double the account in one trade, 200 Rand, and then I keep scaling that up. So then the 200 Rand, I risk 20 Rand, then I'm up to 400 Rand, 10%, repeat. And now I did tell you guys, just to, when you're doing that 100 Rand challenge, I would say put 100 Rand in your broker, and then only put 10 Rand into the trading account, and only trade one trade on that account. This way, you will not have the ability to lose the 100 Rand. The 100 Rand stays in your wallet in the broker. So then you have to then go to your position size calculator and really know, okay, account balance 100, it's in Rands, and so account balance 10, and I'm risking 100%. Then you can calculate your lot size. Obviously, blah, 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 you're going to do your contract size. You know what I'm saying? But US 100, you're going to have to use a high leverage account on that. So 10 Rand, you make one trade. So it's going to be a 0.01. Probably. You got to make sure you know your stop loss limit that you can have with that 10 Rand. And then, yeah, that's how you trade. So it's deposit into your trading account, you trade, and then when you win, you withdraw. If you lose, it's fine, you lost 10 Rand. So now you deposit, trade, withdrawal again into your next trade. That way you're building up your money in your broker, say $200. Then every time you trade, you trade your 10 Rand, you make 100 Rand or 50 Rand. Say you made 50 Rand, you got 150 now. Now you work out 10% of 150, you deposit 15 Rand. You trade with your 15 Rand, you withdraw. But if you lose your first trade with your 100 Rand, now you're on 90 Rand, you don't change your 10 Rand. This is how you compound your account. And that's how I'm doing these small accounts, doubling them every week or so. But at the same time, do this with demos now, guys. I'm not saying trade with your own money now. Please don't trade with your own money until we get more comfortable with these trades. Follow my trades with the demos as well. You might fuck up the entries, you might fuck up the lot size, then it moves 1 pip and you stopped out. Please, 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 until next month, everyone get a demo account on IFX, Athens or something, and start with small amounts. Don't make a $1 million demo account. Start with 100 Rand. Take that 100 Rand out your bank account, put it into your savings, and say, okay, I'm playing with that 100 Rand. It's in my savings. I'm putting it away for when I'm comfortable with trading. I don't need it now, but I'm not going to go and blow it on a broker right now because I don't know how to trade. I'm going to think that this 100 Rand demo account is the 100 Rand that I'm saving for when I'm confident in the market and I've got a 70% win rate that I've journaled. That's another thing we're going to go over next week, is journaling your trades and a bit more psychology and stuff like that. Now that you've got the basics down and you can ask me the questions on the basics and you can show me your setups and stuff like that. Also on Sunday, from now on, I'm going to be doing a live stream on YouTube breaking down the markets for the upcoming week. You guys can ask me your questions, show me your setups, ask me to break down pairs you've looked at and stuff like that. I haven't decided a time on Sundays yet because you know how that Sunday lunch smacks you into sleep mode. But yeah, I have given up drinking for this year, so there's no more like Sunday beers after the lunch or anything. So I might do a Sunday evening stream, maybe not as late as 8 p.m. because, you know, some people love that Carte Blanche episode or that 8 p.m. movie. So it might be around 6 o'clock on a Sunday, 5 o'clock, but I'll let you know. And yeah, I'll give you guys a nice little homework, something or other to do as well. I'm just thinking about it now. But I hope you guys enjoyed this lesson, and sorry about the late upload as well for the guys that didn't catch Wednesday's lesson, but I hope this sheds some light and opens some eyes to the matrix on how the markets are moving these days with these algorithms and stuff. And I'm here to help you guys get profitable. So have an awesome day, and I'll see you guys on Sunday. Yeah, so guys, just to round up that lesson and round it off nicely, there's a few things in the next lesson that I didn't mention now that I will cover. Obviously, we've just gone over the basics now of structure, creating a narrative. If I can just go back into, you can see 1, 2, 3. So we found structure, we create a higher time frame narrative. We now know how to find our supply and demand zones, which is our order blocks and our breaker blocks. This is basically where the institution algorithms enter in multiple positions. And I just want to take you guys back to the thinking of, remember at the beginning I told you how, like, so before the lesson I was walking my dogs. So luckily enough, I live around a nice lake and stuff like that. And my dog will hold its pee for an hour, 2 hours before he knows he needs to go for a walk. And he will not let that pee go out until he smells another dog of where it peed. So for us to confirm where the market is peeing or giving us the sign that it's changing at a certain order block, we need to find that, and that's where the double confirmation comes in, and using the divide by 30 rule that I've developed, and that's what gives me the confidence to enter the market, is because, you know, I can smell that the money's entering the market here, and it's really helped me get very profitable. At the same time, when you go into those lower time frames, you're able to secure yourself a tighter stop loss than if you're entering on, say, the daily, but then you're getting confirmed on the 1 hour. Do a test for yourself, and you'll see if you're entering on the 1 hour off an order block, and then you have the double confirmation, and then you're entering off a order block off that confirmation, your stop loss is tiny compared to a daily range, and that allows you to sink massive trades in, and you can smell the pee, because the market, the structure gives you the confirmation with its change of characters and its double weak highs or strong highs and lows on that lower time frame. And let's just say, like, average, let's just be conservative. If you say you get an average of a 1-to-5 ratio risk to reward on a trade, and you're winning at 70%. I actually went through my trading journal today of last year, and I entered, let me actually just bring it up quickly on my laptop here. I have the Excel sheet here. Let me just find it quickly. But these results will shock you guys, like, honestly. Using this simple trading strategy that so here we go, total of 182 trades. I won 117 of those at take profit. I lost 38 trades in the whole year, and I broke even 27 trades. So my win rate it's a very nice number, it's 69.8%. And break even or better, that means if I broke even, I'm fine. Or if I won the trade, 82.7% of the time, I won the trade or broke even. Now, with those stats, you could have literally a risk to reward ratio of 1-to-1 and still be profitable. So you break even at a win rate of 50%. We're not talking fees or swap fees right now. But if you won 50% of the time and you entered a short and your short take profit was as large as your stop loss, if you hit that 50% of the time in a row, like 200 trades, 100 trades, you would be break even. So to break even or better 82% of the time, and I'm still doing the maths and stuff, but I think I've got at least a minimum of 1-to-5 risk to reward ratio on that. So that can just show you like the profitability of trading smart money concepts this way. Definitely, you know, is there's an algorithm at work, because I'm sure a bank would be happy with these results for sure. And any trader would be happy with these results. So anyway, I know tonight's lesson, this was a recap video. So I originally streamed this over an hour, and then I fucked up on the recording on the OBS because I was in Paris at this time, and I had bought a new laptop, so I hadn't worked out all the kinks. But I hope everyone has taken, you know, some notes along the way, or if you haven't taken notes, you realize that maybe next lesson you need to have a little pen and paper with you. I'm going to post this in resources for you guys for sure. Again, I'm going to go over Reynolds' PDF that he sent me about order blocks, and then I'm just going to tweak it to, you know, my language and post that for you guys probably tomorrow or the next day. But yeah, use these videos, guys, as a teaching point to go over when you're sitting in the chart. You can put it on your phone. It's a YouTube link, obviously, and it's unlisted on my channel. So you can watch it on your phone while you're playing on your laptop as well, just to back test this. And next lesson is going to be an interesting one as well. I've got some good resources for you guys to journal your trades, to back test. We're going to go over fair value gaps and liquidity, on why the market moves from liquidity to liquidity. I'm going to show you in-depth examples. But anyway, I'm rambling now. I'm going to open up the mic situation. Any questions, any comments would be appreciated. And yeah, how are you guys enjoying your first couple lessons?
Jared, the last lesson, it's uploaded on resources, but it's only 22 minutes. Are you sure you uploaded the right one? Because I mean, you did have didn't you have like a 40 minutes lesson last time on Monday?
Let me check there. Okay. Oh yes, okay. So I do have it recorded. I haven't uploaded it yet. I'll upload it again. Thanks for reminding me. Sorry, I'm just dealing with multiple tiers and different stages of trading as well. So I'll upload that for you as well.
I see you've got a lot on your plate, so it's fine. Yeah.
No worries, bro. But thanks for reminding me. I'll upload that for you guys. The full one as well. Lekker. But how are you finding it, bro? Are you grasping the concepts?
Well, I would like the concepts, yes, but then theory, I'm struggling, like identifying market structure. That's something that I really need to work on. Getting confused between change of characters and
yeah, bro. Listen, it took the first group a lot as well. In my next coming lessons, you'll hear at the end, I go over everything again. But it just takes repetition, guys. At the same time, you're new to trading, for me, I deal with this every day, so it's so easy for me to see. But you'll see the next couple lessons that I've recorded, actually at the end we have really good questions and answers, and questions before the lesson as well, where I go over everything again and I go over it in more detail. Obviously, just stick with me. This is my first time teaching people how to trade, so for me it's all in my brain. So to get it out in words, I'm working on that, you know.
Okay, that's fine, Jared. Yeah, no, it's fine.
Thanks, bro. Kev.
Yo. That's
Yo.
sick, man. Yeah, that's awesome. Thank you very much. Again, I'm just going to have to go through the video and cross-reference everything you were talking about, and yeah, we'll take it from there. And then I'll probably have more questions on Monday.
Perfect, brother. And did you get what I went over with the order blocks and stuff like that?
To be honest with you, I'm going to re-look at this video again. So the sooner you post it, the better for me. And then I can kind of see what I did wrong. I think I was a little bit flustered because I'd given you the wrong graph. So I was kind of bummed with myself. But I'm stoked that I found certain place. I was in the right direction, put it that way. I just wasn't. I haven't finessed it. So yeah.
Yeah. Cool, bro.
Yeah. All good.
And
all good.
100%. And then also, guys, I'll give you my indicator for free. So don't stress about that now. My indicator, if I can show you my charts, I can literally, you see how we got a bear chart here. Turn on StratoFX, Smart Money Concepts, boom. It literally draws out the order blocks for you. So these are your short order blocks, these are your long order blocks, gives you your change of character, your internal, your major breaks, as well as labeling your strong highs and your weak lows. So I will give this, guys, to you. I will give you this indicator, but I want you guys to like understand why these are happening before I give it to you. So this will be a little bit of a prize that I'll give to you. I'm not going to tell you when, but just understand that this has been worked on, this has been developed by me, it's been tested on multiple pairs. I can even go into like UK oil, for instance, and show you how it's drawn out all these order blocks. So the only order blocks that show are the unmitigated order blocks. So these would be the positions you're watching to then go short or long, etc. We can go on to even USD ZAR, and you can see how quickly it's saying, okay, we're in an upwards move now, so we're only looking for buys in the blue. So I hope that gives you guys a little hope, but just remember, I'm hiding it for now. Because I need you guys to learn it first, because I didn't have this when I started. And trust me, you don't want to rely on an indicator, you want to rely on time in the market and experience in the market. Okay, is everyone happy for tonight? I'm going to end now. It's a little after 9. Hope everyone's having fun. And yeah, thank you guys so much for tuning in. I'll post this video obviously in the previous video for you guys, and just maybe let me know how it's going. Are you guys enjoying it? Obviously it's a lot to take in and digest, but maybe it's eye-opening for you guys.
Oh, shot, Jared. Yeah, big time eye-opening, man. And,
No, Jared, thanks, bro.
shot, dude.
Great, thanks a lot.
Pleasure, guys. Have a great rest of the week, and we'll chat soon.
Cool.
I'm gonna end the recording now, and yeah, do your homework, Sipa.
Yeah, no, I'm done. So I'll definitely have all my